Good morning, everybody. I am Mark Sebastian, your only option. Today, we are talking about what just happened, why, what it means, and where we go next. So let's dig in. All right. So, over the last few days, obviously, the market has been facing some pressure. Let's start by looking at the CBOE Volatility Index. I'm going to share my screen here. And we had quite the spike on Monday. Monday, the VIX got all the way up to as high as almost 66 before settling in closing around 38. Most of this high VIX actually happened on the open. A lot of the panic actually happened in the overnight session. Why? Well, the panic was generated not here in the United States, but was generated in Asia. And it was because of this yen carry trade. Now, I want to give credit where credit is due. Trying to remember the gentleman's name that was talking about the yen carry trade, but I'll pull it up in a second. But just a smart gentleman. What is his name? Because I want to give the guy credit. Well, when I figure it out, I'll share his name. But I'll share his name in chat. But really smart guy. And all right, so let's get back to business. So here we are on Tuesday. The market has recovered, and about call it half of what we gave up on Monday. VIX is back below 30. Pretty nice, aggressive move lower. So what does this mean? Why are we here? Well, let's start by looking at what this trade actually is. And it's actually pretty simple. You would think for the amount of damage it did, it would be hard to understand, but it's actually really easy. So I'm a big fund. I use my credit and I borrow money and I go to buy the Japanese yen. All right. Why? The yen, the interest rates in Japan are still near zero. They've been zero forever. Japan's been in zero or NERP, negative interest rate percentages, for what seems like 20 years. It's like, borderline helicopter money over there. The perception that rates would never rise in Japan. So I'm not going to be charged anything to borrow that yen. I'm not going to be charged anything to borrow that yen. And that's big. So then I take that low rate that I'm borrowing against, and I convert to US dollars and I buy US treasuries. Why? US treasuries pay a higher interest rate. So now I've got to carry. So think about it. If I borrow $1 million at 1%, and then I convert to US treasuries that are paying 5%, right? I'm getting 4% carry here. Just theoretically, 1%, 5%. Let me mute my chats. So now that would be well enough. A lot of people just stop there. But there's another step if I want to be aggressive. US treasuries are as good as cash. US treasuries are as good as cash. If I go to a bank and I offer them a US treasury note, they'll give me the full margin on that. So now, if I really want to goose up my returns, what if I post my US Treasuries that I'm receiving interest rate on, and I buy securities? I buy Bitcoin, I buy Nvidia, I buy Apple, I buy Microsoft. Apple being the most interesting. You're asking, Mark, why was Apple in particular? I heard the Buffett news, but we knew about Buffett selling. Why is Apple down at 195 from 218? So $23, 11%, 400 billion dollars overnight. Well, Apple pays a strong dividend, and it is viewed as kind of the safest trade, right? Apple is the safety stock. It is the safety stock. So the safety. So my U.S. Treasuries get posted. I buy Apple. I'm getting the dividend. I'm getting the capital appreciation. So for all of you who's wondering, Apple doesn't have growth. Why am I investing in it? Why does Apple keep going up? Well, because I've got this carry trade on that allows me to take advantage of Apple. So now, what starts to happen? The Japanese government starts to raise rates. At the same time, the U.S. Federal Reserve is talking about lowering rates. So what does this do? It weakens the dollar and rallies the yen. There's an exchange rate issue here. So it's not just that, I'm not getting as much carry, but the rise in rates in Japan and the drop in rates in the US causes the dollar to fall and the yen to rally. Look at FXY. FXY is the ETF that tracks Japanese yen. Down a little bit today. That's why we're up. Well, if a couple of days ago, my dollar was worth 110 yen, and now it's only worth $1 yen, well, all that money I used to borrow the yen becomes a problem, because when I go to convert my US Treasuries back to the yen, I'm going to lose money. So this carry, all those dollars I was making disappear. And all of the dollars I'm making here disappear, and here, and now I'm losing money. Risk manager gets worried. Margin calls happen. So what do I have to do? I have to unwind the trade. I sell my Apple. I sell my treasuries, or I unwind my treasuries, and I have to convert back into the yen. So the yen rallies, the dollar falls. That's how treasuries, if you look yesterday, even as the market was kind of falling apart, TLT shot up and then actually softened. And, there was enough fear demand to push regular stock investors into treasuries. But treasuries did not make the crazy move you might expect given the move in volatility. Why? Because there was an unwind going on at the same time. And yes, and so that is where we are in this trade. There are definitely still people carrying this trade on, working through this trade and managing this trade. So where does this put us? I've spent a lot of time looking at past VIX events, trying to find a comparison to this. And this was the second biggest VIX spike in history. Not in, in terms of where it came from to peak to trough, where it came from to how high it got. Biggest was this sucker in 2018, otherwise known as Volmageddon, sometimes called the Volpocalypse. This was another mechanical. And so people say, Mark, what do you mean by, was it technical or fundamental? No, it was mechanical, right? There was a trade on, and the mechanics of the trade caused the market to go haywire as people unwound that mechanical trade. So Volmageddon kind of has some strokes of similarity because it was mechanical. Now, the other one that I think is kind of interesting and might be similar is the third biggest vol spike. And that is the Chinese devaluation of 2015. And where this one strokes some similarity is that you get this big wick, and then you get kind of a little bit of follow-up volatility, and then VIX kind of pulls back. The one difference between this one and every other one, the other two, all right, how is this different from 2018 and 2015? Both 2018 and 2015 had much bigger drawdowns in the market. So the VIX on Monday, after kind of ignoring everything we had seen leading into it, absolutely outperformed the selling in the S&P 500. So when was the last time we saw the VIX outperforming the selling in the S&P 500? You actually have to go back to 2022 when the VIX topped out at 38.94. This was the last time that we saw VIX. So this is actually kind of a mix of several things. We did have a mechanical sell-off, but this is coming at a time where the market is extremely frothy, right? SPX PEs are extremely high. Rates, the economy is softening. There are real issues here. So that is what I think makes this one a little different from 2015 and 2018. We didn't have some of the economic headwinds around this mechanical trade. So what worries me is this mechanical trade is the beginning of a protracted pullback, which would look a lot like 2022. So what happened in 2022? Well, on that outperformance, remember the VIX outperformance, last time we saw something where VIX outperformed the actual movement in the market was 2022. Over the course, VIX topped out in like March. Over the course of 2022, we saw the S&P 500 drop 600 points. Call it like 12%, and then peak to trough. It started the year closed at 47.93. The bottom of like the initial VIX move was about 4,400. So we initially dropped maybe 10%. And the absolute bottom was on February 24th, where we hit a low of 4,111, almost 20%, good for about 18%. And so maybe we're heading for something along those lines. And that is where I'm wondering whether this mechanical sell-off leads to some real selling. So what do you do? All right, if this is fake and we're going to just rally out of this, it's going to look a lot like 2018. 2018 looked like this. You had your Volpocalypse selling. VIX peaked. And, VIX peaked and we got a follow-up sell-off. And, that was it. If you look at the VIX at this time, the VIX peaked on the 6th, dropped, rallied a little bit on the 8th, and then that was it. We were back to 15 by the 26th. So if we see a lower low in the S&P and we don't close at a new closing high for VIX, we're probably not going to see 65 again. But if we don't close at a new closing high for VIX, that's a signal to probably start accumulating. But if we close at new, if tomorrow, I think today probably going to end green. But if on Wednesday we close at a lower low and VIX closes at a higher high relative to Monday's close, that is telling you that we're looking at something like 2022. Now, what am I hoping for? I don't care what happens. Either way. Why? Because I'm watching VIX and volatility to execute my double down VXX trade. This pop in volatility has been absolutely great for my VXX trade. The higher VXX goes, the more it has to fall. It's like an elevator with no emergency brakes. And so once this process ends, and I will know what it ends, we have the mathematics and the mechanics behind it to see it, right? The reason we didn't enter it, the reason we have not been short volatility for the last week and have been prepping our students for volatility events into this is because we saw this coming. But we will see it coming the other way. And when it does, we are going to go into VXX in my double down trade. And if things are high enough, I may play around in UVXY and U. It's going to be a fun, awesome, quick and easy trade. I'm expecting to make 100, maybe 200%. So that is what we're looking at. If you'd like to join me in that VXX trade, click the link above me. All right. So Robin asks, is VIX still in backwardation? The answer is yes. No hedging with JPY USD forward. I'm sure, Alan, some were hedging with the JPY USD forward. Isn't that trade only about half unwound? That's my understanding. How much money is involved in the carry trade? Probably too much. It was a crowded trade. If the market keeps selling, will VIX go higher? Maybe, right? It really depends. It probably won't hit 65 again because that was the pure sheer panic, but it could close at a higher high or a higher high close, which is more important, right? Rates were about to rise in 2022. They're likely to fall. Doesn't that justify a shallower pullback? Rates falling isn't necessarily bullish, RM Gainer. In fact, if rates are aligned with a weakened economy, that is a real problem, and that could be an issue. Is there an inverse for VSX? Yes, it is SVIX. And I have something fun planned for SVIX coming in a couple of weeks for Trading Desk. People on Trading Desk are asking me, hey, why, what's the deal with VXX? I said, don't worry, we've got something fun coming in SVIX. So are you saying it should close lower today with VIX closing higher than Monday? No, I'm expecting the S&P to probably close up today. But what I'm looking for a bull market for us to be able to go long is tomorrow the S&P to close at a lower price than the close on Monday, and the VIX to be lower than it also closed on Monday. Yes, a higher close on VIX Wednesday than the close on Monday would be a problem. That would tell you there's an issue. When do we short TLT? That is a good question. I'm not sure. Is a recession likely? Maybe right now it looks like a potentially mild one could happen. But I don't know that. Yeah, I don't really know exactly. There's this SOM rule that says maybe we're in a recession, but that SOM rule was written around certain. That SOM rule has never come from kind of the economic levels we're currently at, and the tight labor market makes things a little different. If the labor market wasn't so tight, I would say a recession is 100% likely. But could we have like a little baby one? Yeah, but again, you look around and you still see a lot of for hire signs to keep walking that main street, and if you see those help wanted signs coming down, that's your sign that things are a little different. I know. All right. Okay. So that kind of hopefully explains the trade to you guys and how that all works. All right. Do we have any other questions? All right. Well, folks, once again, I'd like you to join me in this VXX trade. You can click the link in chat or call my team 888-872-3301. I hope you guys have a great rest of your day and a great week. Andrew is going, for those in Trading Desk, Andrew is here to take care of you guys. I am Mark Sebastian. I am your only option. Have a good one.